For coming. This is the first part of the presentation, which is vertical spread. People don't know about vertical spread, so when I come to know people don't know, I said, okay, I'll cover this extra topic. So after vertical spread, I will talk about the stocks and the markets. So let me explain what vertical spread is, and I have a service for this also, and you may be interested in it. So vertical call spread. So we talk about vertical call spread, and then at the end, markets analysis. In the middle, stock. So I have too many slides on a stock. So you have to bear with me. It's a long way, 1 hour or more. So what is the spread? So spread is simultaneously buying one option and selling another option with different terms on the same stock. So in other words, you buy and when you're trading when you're putting on directional trade, you just buy long call or you buy puts. But when you're putting the spread, you go long, and then you go short. So you sell for $10 and you buy for $10 and then you sell something against it, let's say for $4. So your risk is $6, but your profit is limited also. So the advantage of a spread is less maintenance, less time required to monitor the trade, less risk. So the spread is good for trading. So I do spread trading when I see the major bottom has formed, but the stock will take time to move. So when the major bottom is formed in the stock, you can create a spread, buy the long strike and then buy the short strike. There's a you need to know which strike to buy short and which strike you need to buy long. Sell short strike and buy long strike. So I will explain to you, and I do that in the spread service. So because you know the target is going to hit, it's just that it's taking time. So when the stock is taking time and you know the target is going to hit, you create the spread. And when you create the spread, the time decay doesn't go in your against you. The time decay works in your favor because you have a short strike. That's one way of one reason for doing a spread. Another reason for doing a spread is when the volatility is high, the stock is moving fast and furious. You know it will be moving. You don't know how long it will move, where it will go. So you want to protect yourself. So you go long and then you short the strike. So you are protected. And the third reason is you are in a long call and you have pretty good money in it. You're making a lot of money in it. Your premium has exploded. You bought at $5, you have $15. It's trading at 15. So instead of selling that for $15, you sell another strike out of the money to collect that premium. So now you're still riding the stock, but you limited your risk because you collected the premium. So you took the money out of the market by selling the out of the money calls and riding the stock. So there are various reasons for doing the spread. So as explained, to reduce risk. So you can reduce risk because when you buy long calls, the risk is whatever you have put the premium. But if you sell something against it, then you reduce the risk because you collected the premium. And another reason is to lock unrealized gain. Like I said, when you have built a long, instead of selling that call, which is you have a lot of gains and you're afraid you may lose some gain, the $5 option you bought is trading at 15. So instead of selling at 15 because you think it may go to 25, you sell something against it, for instance, for $10. So you are invested at $5 and you sold out of the money calls at $10. So you have already made the money. Now the rest of the money, you're just riding the stock to the upside. So now the point is, when do we put the spread trade? So I explained we can put the spread trade when the market outlook is moderately bullish. The spread trade, the vertical call spread. So when you put the vertical call spread, you will put it when the market is bullish, moderately bullish. Otherwise, you will just buy the long call. So moderately bullish means the stock is moving towards your direction, but it's taking time. It will take time, slow. So usually this thing happens when the stock has bottomed and now it has changed its direction, but it's not going up in a V shape. So the stock is not going in a V shape. Some stocks do go, like LRCX, like Apple went, but most of the stocks they go slow, so they waste time because they just came after severe downtrend and now they are stabilizing. So at that time, when you understand that it has bottom, you can create a spread. And then the stocks move in certain. There are certain stages of the stock. The stocks move first. They move slow when they bottom. Then they test the bottom. Then they start rising again, and people realize that okay, the stock has started to move. That's the time they buy, and it accelerate upward. Then new buyers come in, the short bears in it cover their shorts, so it goes up and then it's stabilized, then it goes up again, and then it hit the top, and it hit the top, and then it either consolidate there and then take another stage up, or it just comes down. So there are various stages of the stock. So this spread works when a market is bottom and is rising, so it works pretty good. And if you can also, there's a limited risk in it and limited profit. So limited risk, limited profit. So of course. Now there are two types of spreads. So bull spread and bear spread. So bull spread is when the market is bullish. Bear spread is when you think the market is bearish. So bull means when the market bottom. So suppose the stock bottom, you will put the spread bull spread. If you think the market has topped out any stock and it will take time to drop, then you will put the bear spread. So you have to identify the direction of the market of the stock. Now, there are three types of bull spread. So vertical bull spread, horizontal bull spread, and diagonal bull spread. So there are three types. So there are two types of spread, bull and bear. In the bull, now you have three. And then there is another one, calendar spread. So let's talk about these three. And I do vertical bull spread. So this is the service concentrate on vertical bull spread. So I'll explain more into this vertical bull spread and briefly on horizontal and diagonal. So let's see what vertical bull spread is. And to understand the vertical spread, you have to have some basic knowledge of options. So vertical bull spread is where the expiration date is same and strike price is different. So expiration is same. So means today is March. So let's say the next month is April and then May. So let's say we are buying month of May. So the long call you bought has expiration date of May. And the short strike you're selling also have the same month, May. But the strike price is different. You're buying, suppose, a strike of 100, and you are selling the strike of 105. So 100, 105, but both for the month of May. So this is, you have to remember, both month same. For horizontal, so horizontal, think about this. Expiration date is different, but the strike price is same. So for instance, you bought May 100 calls, let's say on any stock, May 100 calls. And today is March, 1 week left in the expiry of the option. You can sell March 100 calls. Suppose the stock is trading at 98. You can sell March 100 strike and collect some premium. So 1 week before, 2 weeks before the expiry, you can sell the strike, which is out of the money, and collect the premium. The reason you're doing it, you think that the stock will not go over that strike. So you collect the premium, and then you repeat the process again. Let's say you have December's long calls. So in April also, during the last week, you can sell another out of the money strike, collect some premium, and that strike expires, option expires, you get to keep the premium. Then you repeat the same process, May, then June. And the reason you're doing it, because you believe the stock is going higher and higher. So that's why you have that long-term calls. So you have a call of maybe December, and then you're just selling out of the money calls every month to collect the premium. So that it works like that. Now diagonal, meaning expiration date is different and strike price is different. So December, let's say you have a December strike of 100, December 100 calls in something, and today is March, 1 week left, and the stock is trading, suppose, let's say 108. So you're already in the money and you have a profit, but you don't want to sell that calls. So you can sell March 110 strike to collect the premium. You think that in 1 week, the stock will not go above 110. So you get to keep the whole premium, and you just repeat the process every month, and the stock keeps rising. Your December 100 calls keep going up and up and up, but you keep collecting the premium. So during the last week, you should be looking at collecting some premium. Just sell way out of the money, like maybe 1 strike, 2 strike. So I will explain to you vertical bull spread in detail and give you the scenarios. So to give you the idea of what happens, what you need to do, how you can fix the trade, take advantage of the move which is happening and you are already in the trade, etc. So I'll go over that. So this is vertical bull spread scenario. Let's say there is a stock called XYZ, and as mentioned, the strength is moderately bullish. So you know the stock will go up, but it's not going like crazy up. So instead of buying strictly direct calls, you said, okay, I'm gonna put the spread, and that's what I do in the spread. I say, okay, I'm gonna put the spread and capture the move. And it requires only 5-minute time. Just look at it, what the stock is doing, that's it. 5 minutes, open your platform, check, that's it, close it. If you have to take action, you take action, then otherwise nothing to do. So let's say the current price is 101. So if the stock price is 101 and you said, okay, the stock will go to $111. So there is a 10-point potential in the stock. You have the option, you can buy, let's say right now is March, let's say a month is right now is September or November, right there. It's saying on the slide, current month, November. So the month is November. The stock is trading at 101, and you know stock will go to 111. So 10-point potential. But you know it will go slow. So what do you do? This is what you can do, and it's the month of November. Buy to open January 100 calls at $5. Let's say it's trading at $5. So you buy January 100 call at $5. If you don't want to put the spread, then all you need to do is buy January 100 call at $5 and leave it as it is and hope the stock goes to 111 and you make money. Your premium from $5 goes to 6, 7, 8, 9, 10, and you make money by the before the expiry of January. So that's one way of putting the trade. So this is directional trade, but you don't want to do that. So you say, okay, I don't want to put $5. I will sell to open January 110 call against it. So you can sell against it as long as you have January 100 call. So don't try to sell before, otherwise it will not work. You will get error message. It won't work. It can work if you have a clearance from your broker and you have a bigger account, so it will work. So but most of you will not work, and don't try to sell naked, do naked calls. So it's called naked calls. So don't do that. Don't sell what you don't have. Always sell what you have. So buy to open, January 100 call at 5, and then immediately sell to open, January 110 call at $2. So both are open. You see, both are open trades. One is buy, one is sell. So your cost becomes $3. Net debit, 5 minus 2 is $3. So now you're only invested $300 per contract, not $500 per contract. So your investment is $300 per contract. So what will happen now? So now you need to know how much you will make in the trade and how much you will lose in the trade, and where is your break-even point. So the maximum profit potential, this is the formula. You can write it down. The formula is difference in strike price minus net debit of spread. So the strike price difference is 10 points. You sold 110 against 100. So the spread difference in strike price is 10, and you paid $3. So maximum profit you will make is $700. So you invested $300 and you will make $700 by expiry of January. So January expiry, if the stock is trading above 110, you get to see $700 profit, which means 233.33% gain. So this is real. This is not some fake number. This is the mathematics. I'm giving you mathematics. So it will happen. So 233.33%. So you invested $3, you made $700. But most of the time, we don't keep it all the way to expiry. Sometimes we do when the stock is trading way above $110. So let's say the stock is trading at 120. So you don't need to close the trade. You just let it move, and then you get to keep the premium 233%. But most of the time we are closing it before the expiry. So this is a absolute gain. But then there is another scenario. What if you close before expiry? So what will happen? So I'll tell you about that in next slide. Right now, we need to know what is our break-even point, where we will start making money. So the formula is lower strike price plus net debit of spread. So remember, when we put the trade, the stock was at 101. You will be break even when the stock trades 103 and above. So all the stock needs to do is move 2 points above your current price, the long strike, and you will be break even. So break even point is the lower strike plus whatever cost to incur that net debit. So you paid $3. So your break even point is 103. And when you bought, it was trading at 101. So as soon as the stock moves 103, you're covered. You will, as long as it stays, you will not lose money. So now you need to consider the points. Always the first trade is buy to open. Always do that, buy to open. Then you have something in your hand. Then the second trade is sell to open. Then you have, then you can sell against it. So buy to open, sell to open. Both trades are open trades. So you see open, both trades are open trades. Also, you can execute as a basket. So instead of doing individual trade, you can execute as a basket. And the reason for doing basket is to take care of the spread. Sometimes the spread between the one strike and then another strike, the spread is wider in one strike, and another strike has a normal spread. So you just decide, okay, I'm gonna pay $3. Let the broker handle it. So if somebody is willing to, whenever your basket limit hit, you will be given the trade, buy to open, sell to open, at $3 price. So you don't have to worry that, okay, once I buy, suppose at $6, then only you are able to sell at $2.50 because you are unable to sell you always sell at the bid price. So you are unable to sell, so you worry about it. You can set the basket price and let the market take care of you. So you can specify the price for the basket. Then you know, okay, this is my risk. So the first step, closing the so when you're closing the bull vertical spread. So now suppose, let's say you decided you bought in November, now it's December, and the stock is trading, let's say at 109, and because and it's stuck, it's not going above 110. So you think, okay, it's trading at 109, it's not going 110, market is also moving down, and so let me close this trade and put the money somewhere else. So what you would do, you will close the short strike, which is short strike is 110. So because you executed sell to open, so you will do buy to close. So whatever you sold, now you're buying it, but you sold at lower price and you're buying it at higher price. It's okay. You buy at a higher price, so you give $6 to buy it back because it went up. But your long strike also went up. So long strike, you sell to close because you bought it. So now you sell to close. So January 100 call at $12. So net proceed is $6, right? And you invested $3. So out of you invested $3, your gain is $3. That's 100% gain. It's less than 233%. If the stock moves above, way fast up, then you keep it, keep the spread. You will make 233 gain. Otherwise, less maintenance, and you make 100% gain, which is not bad. And then you repeat the same process on another trade. So always buy first and then sell. What not to do in vertical spread trade. So this is what to do. It should say what to do in vertical spread. So not is not right. What to do. So what you should be doing, you should a spread order should be executed as a basket. So try to sell the spread, create the spread as a basket, so that the spread between the bid and ask is taken care of. And you should be, if you are not executing as a basket, then the long and short strike should be open simultaneously. So when you are, like when I'm trying to create a basket, vertical spread, I look at the long and short strike at the same time. I see that, okay, the spread is normal, the trading normal, it's okay for me. When I buy long call, I will be able to sell short right away. And within few seconds, I just, I don't try to do like this. I buy long call and then I say, okay, I will wait for the stock now to come down, go up, and then I will sell at a higher price. And so my spread is less. No, you have to do that simultaneously and close it simultaneously also. So if you buy your short strike, then that's not the objective of the spread. Then the long is open. So that's not the objective. So you need to do both. Otherwise, you're just doing the directional trade. So don't mix it. And the type of account needed to do spread is margin account. So it doesn't work in cash account. There's a minimum equity requirement like $2,000. There's a maintenance requirement. If the trade goes against you, broker will ask you to put more money in your account. So make sure you understand, talk to the broker, make sure you understand the minimum equity requirement, maintenance requirement, and margin account is needed, not cash. And these requirements varies from broker to broker. So just talk to the broker, go to the website, find out what they have to say. Okay. So now the good part, how to maximize gains in vertical bull spread. So one way is you put the spread trade and then forget about it. When the stock hits the target, you close it. So that's the lazy way of making money. Now, the more active way of making money, like we do, is this, and my members do. Always when they give me the report back when the trade is closing, they tell me what they did, and they know what to do. because they know all this. So I tell you, knowing the support. So if you know, you can maximize the gain. Once, suppose you put the spread trade and the stock went up and then came down. So if you know the stock has come down and it's a support, you can create another spread, or you can just simply buy long calls. You can do that just to add another way of making extra money. So you already have a spread. You can create another spread. You can buy long calls. You can buy some shares. It depends what's your portfolio. And also knowing the resistance. So if you know the resistance, let's say your target was 111 and the stock is sitting at 109 and the resistance is 110. So resistance is 110, your target was 111, it's sitting at 109. It's not going to 111, it will come down. So if you can identify the resistance, you close the trade early. You don't wait, no, my strike is 110, I will close above 110. No, nobody told you you need to close at 110. You close at 109 because it's a resistance, it's not moving. You're wasting the time, so just close and move on. Knowing the target, this is very important. So when you're putting the vertical spread, you need to know ultimate target, where the stock will go. If you know that, then you can have a wider spread. So the wider the spread, the more money you make. So if the stock is trading at 100, you know 110 is the target. You will make a lot of money by selling the strike 110, because then your maximum gain will be when the stock's trading above 110. But if you suppose sold the strike 105, and as soon as the stock goes above 105, your profit is limited. You're not making any more money. Whatever money you made already. 105 is your limit, and anything above is doing nothing to your trade. So you missed out. And the reason you missed out, because you did not understand the target. So when you're putting the trade, you figure out the spread, the target. So the wider the spread you put, it's risky. It has risk, but the more gains you have if you know the target. So I like putting on the spread when I see the potential. So when I see the potential, I say, man, this is so good, because now I'm buying and selling the order strike, and I know I have like 2 months, and in 2 months the stock will be trading above that target, so I will have a lot of gains. So know this, it's very important. If you know the support, you can add some. If you know the resistance, you close your trade. Closing short leg at support. So you can close the short leg at support. Sometimes we do that. Let's say you bought the stock at 100, you put the spread at 100, and your short strike was 105, and the stock drops. So stock drops to 95. So if the stock drops at 95, your 100 strike still have premium left. So suppose you bought at 5, the premium is $2, but the strike you sold for 110, there is no premium left. It's like trading at 10 cents. So when it's trading at 10 cents, it doesn't make sense to keep it open. You close it. So this is the advice I give to my members. As soon as you put the trade, the short strike should be bought at good till cancel 20 cents. So it doesn't make sense if the short strike is trading at 20 cents premium, you sold it suppose at $3, you have $2.80 gain, you leave it open, because what will happen if you leave it open and the stock moves up back, your short strike will go again in profit. Then you will say, oh my God, I should have bought it at 20 cents. Now it's trading back to $3. I missed all the move. So good till cancel 20 cents. Let it hit. If it hits, okay, you're out. You only have long calls. Now you can double down on your long calls. You can sell again the short strike. Now you can sell. You can do many things. So always close when the premium is like 10, 15, 20 cents left. And then you can double down on your long side. So in other words, your vertical spread, you close the short leg, you collected the premium, so your long side has less cost. So that money, you can put it when the stock starts moving, you can put that money into your long strike. You can buy 95 strike now. So you have 95 strike and you have 100 strike and sell it together and make money. So you can do adding additional long call, or you can simply buy shares. So sometimes I send the alert, say, oh, okay, you can buy some shares. So if you have money in your account, you can buy 100 shares at support and you close the short leg. So you close the short leg, you have a long strike, and then you bought some shares, and when the stock starts moving, you make money on both. So these are the strategies you can use in vertical bull spread to maximize gain, or you just leave it as it is, let the market do its thing. All right. So now there are three types of spread, vertical spread. They range from being a conservative to aggressive and extremely aggressive. So I always look for in the middle of the road thing. I'm not a conservative in nature. Otherwise, I would not be may not be here if I were conservative. I may be back home. I'm not extremely aggressive. I'm aggressive in trading. So this is what I put the trade. So my trades are aggressive in nature and not extremely aggressive, because extremely aggressive, you have to be right and you have to be right quickly. Otherwise you lose money. And conservative, okay, you can be conservative, but you make less money. So middle of the road aggressive. So let me explain a little bit. So different strategies. Conservative spread, where you buy long calls in the money. So stock is trading at 100. You bought the strike long calls 95, and then you sell the short one at 105. So you're buying in the money. So you say, okay, I'm protected to the downside. So that's conservative. Aggressive is when suppose the stock is trading at 103. So instead of buying 100 strike, you bought 105. So you're little out of the money. So little out of the money you bought. So both are little of the money. Or actually aggressive is you are in the money, you bought 100 and then you're selling 105 and 110. Whereas extremely aggressive is the stock is trading at 100, you bought 105 strike, which is out of the money, and then you sold 110 way further. So stock is at 100, you bought 105, which is out of the money, and then you're selling 110. So when you're doing it, you make a lot of money, but provided the stock goes above 105 quickly and it stays there. So a lot of time, if stock is trading at 100, it may not go to 105. It may stay below 105. So if it stays below 105, you will lose all the money. Your premium will expire worthless. So zero. So that's why it's extremely aggressive. It works when both strikes are out of the money. So middle of the road, one strike in the money and another one out of the money. So that's the difference between vertical spread, aggressiveness. So I hope you understand. This is what I do, aggressive spread. So this service is available to you right now at 57 per month. It's 77 on the website. It's actually not even listed on the website right now because I'm coming up with a new website. So it will be 77, but right now it's 57. So you can take advantage. Just send me email and I will send you the link for this service. So this is vertical spread. I will go and talk to you about the charts. So next presentation is on charts. So please stay. Don't go anywhere. And I have 6-month Mastering the Market coaching program, which starts on Monday. If you're interested, send me email and I will send you the booking link and we talk for 60 minutes and see if you like. And we go from there. All right. So so in this presentation, I will talk about stocks analysis. I prepared a lot of charts. So I'll show you the charts and explain to you some of the charts which I showed you last Sunday. And I'll show you some charts for coming week. And I'll give you the reason why I mentioned the stock will move, and it moved. I'll show you the charts of the markets, the 4 indices. I will show you the support and resistance level we talked about last week. I mentioned, and then I will give you the support and targets for the market for the coming week. So all four markets right now are in bullish phase. So this is what we need to know. Right, last week I mentioned that the Nasdaq had given the heads up, and on February 9th, market bottom. So market bottom February 9th, gave early clue on February 6th. Nasdaq gave heads up last week, and all four markets given another buy signal, strong signal. And during trading hours, I keep sending alerts that market has given another buy signal, another buy signal. As soon as I analyze it, I send the alert, market has a buy signal. So I receive email, okay, market has a buy signal, what do I do? So do whatever you have to do in your portfolio. Saying that is enough unless you're signed up to index service. When you buy calls on QQQ SPY, I send, or you just don't do anything. So, oh, this is a wrong presentation. So this presentation has many slides I have already talked about during my last few webinars. So I will skip those. You don't want to hear again, maybe next time if you are new. So I will go straight to the charts. So I'm moving fast. So all these, I don't want to talk. I want to talk about $17 offer. So I have a $17 offer for you. If you're new, if you're already a member, please don't ask me to give you another $17 offer. And this is the link, $17 trial offer. So it's so simple. You need to just remember or send me email. You can sign up for $17 for 2 weeks. If you like swing option trial and see if I can help you make you money, or you just do paper trading for 2 weeks. If you like, you can then continue at 117. So $17 offer, send me email and I will send you the link if you want, or you can go directly to the page, $17 trial offer. I have a 60-minute strategy session also. So here's the chart of Abbott. So I prepared this chart. I did not trade. I missed it. But here's the Abbott. So I'm trying to explain the 50-day moving average. I keep showing you 50-day moving average plays a big role in the stocks. So whenever you see a pattern like this, you need to go long. You need to take some risk and go long. So you see, the stock is trying to cross the 50-day moving average right here. So this is the first signal that you maybe want to take note of it. It's trying to go up. Otherwise, why after 2 days of pullback the stock is doing like this? So let's say you're not sure what it will do, although it closed above 50-day moving average. You can go long on this candle, but you have to know that this is the resistance right here. So if you drew this line, always you can draw the line from top to bottom of recent highs and the previous highs. You can do that. So here's the resistance, $60. So you can wait for $60 to cross and look what happened. You see the magic? So the magic was happening here. So if the magic is happening, you have to put some money into the magic and take action. Otherwise you miss out the move. And I missed it. So because I trade so many things, sometimes I just don't want to trade too much, because then if I lose, I will lose too much. So I don't want to do that. So I am I want to sleep nice, peaceful. So as long as I am peacefully sleeping, I'm happy, because I don't want to wake up one day and cry. So it's going up. Now there is no resistance. The only resistance, always look at the left. So I always tell you, look at the left. This is the big resistance candle right here. So the resistance is 64, 65. So this is only, you need to watch what the stock will do. Maybe the sellers will come, something magically happens at the previous resistance. So I'm trying to tell you, the big boys, they came right here. You see how the hammer formed? They came here. The retailers are coming here now. They will come here. They will say, oh, Abbott is going up. I heard on the news that Abbott wants to go up. Let's buy. So, and then they forget that somebody bought at 56, 57. They bought right here. They didn't buy here. They will sell here. They will give it to you, so you can lose money. AIG. So now AIG is giving trouble, but it looks bullish, or super bullish. I hope it goes up fast. But when we lose trade, and my thing is, people say no, don't take revenge. Well, I take revenge from the stock, so I just keep watching it, and I get back in. So you can take revenge from the stock. The stock doesn't say no, don't take. So this is a hammer. It's just that when you're taking revenge, you don't give back more money, so you have to be careful. So this is a strong hammer, and this is a very strong candle. So AIG has bottomed. Now the resistance is what? The previous support. So this was the support which got broken. So this is the support. It will hesitate here and then move up. So expect AIG to do its thing. So again, where the dinosaurs came, dinosaurs are here. They came here. The retailers will come somewhere here, up 62, 63. That's where the retailers will come. Dinosaurs came here. So as soon as it breaks 58, 50, AIG should be headed up, because this is the ultimate buy signal. The buy signal has already been given. If you try to short and go puts and buy short and do something crazy, you will lose money. It has established the direction. So this is the direction I talk about. Once you know the direction, always trade in the direction. Ignore the other around. You can trade, but you have to be quick in taking the getting out. So you have to be very quick. And I will explain. We did the X puts trade last week, Friday. This is AIG again. So okay, so now so this is the 9 March. This is the chart on the 9 March. So you see they are here. Okay, so I didn't know I was showing you previous chart. So it hit the resistance here, right? I told you this support became resistance and it pulled back, but it testing it. So they know, people know already there's a resistance here, but they know also the support here, and the candles are forming high. So it will go higher. AIG is just testing and going higher. AMAT, we traded, some made money, some lost some money. I don't know what individual traders. AMAT is going up. I'm just want to show you the AMAT chart on 6th of March. What I'm trying to show, when the previous resistance is broken, the resistance becomes support, and it's better for the stock to test that support. And then when you see the brand new signal as support, that's where you go long. So always wait for if the resistance is broken, wait for the stock to test it, and then when it moves, you get in. So AMAT is going higher. You say it's going higher. Tested the support. And this was the ultimate buy signal here. Amgen. So we trade Amgen. We are long Amgen. Look at this super bullish volume. Amgen was moving on the day when the market was not moving. So we went long because this move, big volume on 50-day moving average. We said, okay, we need to go long. Next day, this is a super bullish candle. It crossed the resistance. So Amgen is going higher. So just keep an eye on Amgen. It's going higher. It's going higher. It is still going higher. It's testing it. This is the Friday chart. So Amgen going higher. So this is something for you to keep an eye, make some money. Sell it at 197, 198. Yeah, AVGO. So AVGO I spotted on 6th of March. You see the chart, 6th of March. So when I spot the trade, I prepare chart and I put it in the folder. So that's what I do all day. To show you and to send alerts. So I put it in the folder. So this screenshot taken at 10:13 a.m. Pacific, 6 March. So I saw AVGO moving. I said, okay, it's trying to cross this 200-day moving average. It already gave this buy signal. You see this powerful candle? It already gave the buy signal. This is where the dinosaurs are. They are here. Nobody need to tell you. You don't need to subscribe to some newsletter. They tell you Some give you some data where they what they are buying. You can tell yourself that, okay, I can tell dinosaurs are here, so they bought it here. Now it's testing. So when I saw this, I said, okay, I need to just make sure I buy when it breaks above. And here is some resistance. So I was just watching it. I didn't do anything. Boy, on 9th of March, I sent alert to my end of day service. So I have 8 services. I cannot send alert. If I send the alert already, some alert to my other service, then I don't send alert to that service because there's too many trades open. But end of day service is a $49 monthly service. I send the stock alert with target and support. And at the end of the day, I provide the worksheet. So a lot of traders, they take the trade on their own. They have a bigger portfolio. They do that. They want to learn. So they join for $49. So I send alert on AVGO, said target 265. So I gave the target of 265 on Friday. But after market close, there was a news came. Somebody is buying AVGO and it's trading at 275 right here. So if you are long AVGO on Friday, end of day service, you will make a lot of money. It's gapping up big time. So now what happens? Gap play. So I have a gap up strategy. So when the stock gaps up, it can go higher. So I will see on Monday what the stock is doing. Maybe I'll get in, buy some calls. Maybe I just ignore it. So it depends what it will do. So for gap trading, you need to know what the stock did during pre-market hours and during after-market hours. So you need to know the high and the low, what it did already, because whatever it did, it may not happen. It has already happened, and it will not happen again during regular session. So if you're not aware of what happened during pre-market hours or after hours, you will miss out. And then you think, okay, the stock going up, and it fade. It never goes up. So you have to be aware of it. So a lot of times the stock has put on the high during irregular session, non-regular session. This is Baba. We trade Baba. I posted the charts Baba on Facebook group. If you are a member of Facebook group, I post the charts there. There are 2 Facebook groups. One is private, one is public. So private group have more charts, public group have 1 or 2 charts, but I posted Baba, and this is a chart I posted. I even posted on my personal profile. So if you're a Facebook friend, you get to see this also. You are welcome to be my Facebook friend, and you are welcome to join Facebook group. So this is what I saw in Baba. So you see on 6th of March, this is the support. So stock found the support and it gapped up. So when the stock finds support and gaps up, that's window open. This window is open now. The stock is clearly telling you, buy me. So when I send the chart, there are some people, I'm short, Baba. I'm seeing going to 169, 170. So I said, okay, come back when you lose all your shirts and underwear. Then you tell me. So Baba gave you this buy signal right here. It's going up. So the resistance level is right here. So if you know the resistance, this is the resistance. Once it crosses the resistance, it's going up. So we make money on Baba all the time. So Baba is a continued money making stock. So you will keep seeing me talking about Baba. It's going up. So this chart was prepared on 6th of March at 10. This is where we put the trade. And this is where it's right now sitting. So as expected, right? So already knew this level. Now it's sitting right there on 8th of March. And 9th of March is doing the same thing. So it's poking its nose, but 50-day moving average is supporting it. Once it breaks its, move up, push up, it will go higher. So the signal is given here when the gap was formed. So this is what I love doing it. When the gap, okay, I go long. So my platform tells me I have set up for gap. It tells me these are the stocks which gapped up or gapped down. Take a look at me. So I take a look. BA. So now Boeing is another one which makes us money. So 3-day of downfall. This is a doji candle of resistance. After 3 fall, it formed the support. So now you have to know, okay, whether to go long or short. I wouldn't go short on the stocks when there are two supports. There is a 50-day moving average support, and this line is support, and this is the candle telling me there is a support here. So I wouldn't go short. Sorry, I wouldn't go short when the stock is right at 50-day moving average, because I know that it's in bullish territory. Any stock above trading above 50-day moving average is bullish. Any stock below 200-day moving average is bearish. Any stock between 50-day and 200 is in la la land, and I can do whatever I want to do. It depends what the stock is doing, but I have to be careful. So this area is la la land. This is bearish. This is a bullish area. So don't think that Boeing can go down and you buy puts. So I said no. I'm thinking of buying calls. So again, it's just sitting as support. Boom. You see that? So look at it. 5th of March, 9:43 a.m. Send the alert. Notice that the Boeing is finding support, right? 9:43 a.m. 5th of March. 5th of March, 2:53 p.m. This is what the candle developed. You see, bullish. So Boeing is going up. It told you right here, gave you early morning, then it's clearly telling you Boeing wants to go up. So it's going up. Now, where it can go up, so you have to know that after you put on the trade, then you have to know where it will go. That's where traders fail. They can put the trade because they hear it on CNBC or Facebook group or whatever. They get in, then now they don't know where to get out. So now they are stuck. Where to get out? Then they send me email. I have this trade open. I want to get out. Please tell me the target. So if I know, sometimes I say, okay, yes, but I don't know where it will go because I don't trade that stock. So I can't help you. So this is the resistance area, 360 and 370. So you have to take some decision here in this area. If it breaks 370, you stay. Otherwise, if it's dwindling here, you take your profit. But the entry was here. So it's still going up. It's telling you I want to go up. Caterpillar. So Caterpillar also wants to go up. So this is we traded Caterpillar. This was the candle. Based on this candle, you see this forms bullish indication. So Caterpillar gave this. We sold at this doji, fell for 4 days. Now found the support. It wants to go up. So Caterpillar wants to go up. It's staying at support. Wants to go up. CF. So this is I did not trade. I'm showing you the resistance line here. So what can happen at resistance line, and that's why we need to take some profit. So you see, the stock gaps up, but it gapped up right at resistance. So there are many kinds of gap. That's what I try to explain. Where the stock gaps up, did it gap up at the initial stage, or it gapped above resistance? It gapped up at the high. What it did after gapping. So what's going on after gap? So sometimes the stock just gaps up at resistance. So it gapped up at resistance. And you know the window is open. Window can be closed. And that's what happened. So it gapped at resistance. This bearish candle formed. Look what happened. This window got closed. It fell. So if you got in at this gap, you could lose money. So you have to know that, okay, what kind of gap you are going in. This is CNQ. I just prepared chart, show you that keep an eye on CNQ. It could go up. So keep an eye on CNQ. It may go up. COP. I trade COP and make money. So this is what I saw. Just for COP, you know, it's a crude stock. For when the crude is stock, I only buy crude stocks when I see. I watch crude futures. I watch gold futures, silver, and other copper, and all the markets future like Dow Jones, Nasdaq, etc. So I watch those futures. So for crude, I watch futures. So if I see crude is moving from support, and are there any other crude stocks moving, or am I the only one buying one stock which is moving for some reason, and then it will die on me and I will lose money? So I try to do that. So but still, you know, when you do your homework, you still lose money. So crude COP was moving on Friday. and I went long just based on this chart. After congestion, it broke up. So looks like it's gonna go up. And other crude stocks were moving too. So pay attention to COP, SLB, CVX. These three were moving on Friday. Cost. So Costco, I spent a lot of money on Costco. Boy. So I always keep an eye on those stocks where I'm spending money. So I take my money back from them. Whatever I spend, I say, okay, I'm gonna take the money back from you. So Costco is the money where I spend. So I go to buy two things. I buy like 100. So this is where Costco is I'm watching for Costco to for signal, because I'm watching this candle and then I watch this candle. So if I see any up move, especially crossing 50-day, I'm gonna get in and take my money back from Costco. All right, I'm sure you spend money in Costco too. So Comcast, the Costco is everywhere, is overseas, so they spend money too, international. So Comcast fell, but now it's formed the congestion here, and it looks like it's gonna break up. So here is the resistance right here. If it crosses the midpoint of this candle and little above, if it goes above, Comcast will become bullish. So keep an eye on Comcast. CVS also trying to move up. It's taking its time. This is a bullish candle, so keep an eye on CVS. It looks like it's headed upward. CVX, so this is another crude stock. So it's showing the same pattern as DVN. Yeah, another crude stock I like is DVN. So I like DVN. COP, CVX. So CVX also giving bullish signal. So keep an eye on CVX. It's going higher. Delta Airlines. So airlines moving on 8th of March. Airlines were moving. I saw this candle with a gap up. I bought some. So Delta moving when it crosses above 50-day. I expect Delta to move up. So keep an eye on Delta. John Deere. So John Deere, I look at when CAT is moving, I also see if DE is also moving. If they both are moving, it's good. So I hesitated on DE. I did not buy. I just bought CAT, and DE really moved up. So you see on 6th of March, and then what happened on Friday? It moved up big time. So I missed the move. So you cannot buy everything. Just buy one stock in the category and then hold it. So I missed this move, but I prepared the chart. DHR broke up out from the resistance, so it's going higher. Keep an eye on DHR. If it tests back to 100 level and then it starts moving, you go long on DHR. DVN, this is the chart of DVN, another crude stock I like. You see, okay, this is a bullish pattern, I tell you. You can make a note. When the stock gaps down and form the doji. So when the stock gaps down, it formed the doji. It means it gaps down, but doji formed. Doji means the buy and open and close same. So when open and close is same, meaning the bulls and the bears, nobody won. It's just gapped down. So it formed this morning star candle, morning doji. So this formed, and then next day it gapped up. So this was your warning sign that the stock doesn't want to go down, it wants to go up. So I was watching it, and this is what it did. It gapped up. So now DVN wants to go higher. And here's another window. So this window needs to be closed. So it will close around 34. So DVN is going higher. So keep an eye on DVN. I'm long. Okay, yes, see, it's going up on March. It went up, but not much. So it's going higher because this candle gave us the early warning signal that it wants to go up. Facebook, I love Facebook. I watch, I trade. So I spend a lot of money on Facebook. By the way, a lot of you are from Facebook probably. So I spend a lot of money on Facebook. So Facebook, when I spend money on Facebook, I need to get it back. And I spend a lot of time on Facebook too. So time and money. So it's too much for me. So this is what Facebook is doing. This is the support. And it wants to go higher. On 5th of March, we went long on Facebook and it's going higher. You see, it hit the resistance and now it's poking its nose on 7th of March. and it poked its nose above. 8th of March is sitting right here on 50-day moving average. Now it wants to go up. So the trade got developed like this. This was your early warning. This is the second, want to go up. On a bearish market, I think the market was not good when the Facebook was moving. So now Facebook wants to go up. So another one, FDX. FDX, so this, when FDX fell, it fell at this support line. So we bought puts with the expectation that it will go down. And this is what happened. And this broke. And then we got out at break even. And now FDX is giving another buy signal. So FDX is long. So now when FDX, this is the kind of trade you need to put on your vertical spread, because it may take time to move, but it will move. So if you know that it will take time to move, but it will move up, the direction is now determined that it will go up, you need to put the spread and take advantage. So let the stock do its thing. You can buy 240 calls and sell 250 calls. So 10-point spread. When FDX goes above 250, you get to keep the maximum gain. So you spend $3, $4, you make $10, or you spend $4, $5, you make $10. So this is the kind of trade you need to put for vertical spread. F5. So F5 is this candle is bearish candle. So when you see like this, you expect that the move will come more to the downside. So you need to get in with the puts and get out also fast, because F5 is one crazy stock. So it moves big. So F5, this is a bearish candle. General Motors, I don't trade General Motors. It looks like it bottomed, it's going up. I receive inquiries on General Motors, so I just want to show you that it wants to go up. So keep an eye on General Motors if you are interested in GM. I don't buy. GPS, this candle is bearish, so it looks like top. So it looks like gonna go down here, 32 level. So this is a bearish candle, especially if it breaks the 50-day, and it's sitting right here, and it broke. So you see how this trade got developed. This bearish candle, then move back, move. Now we know 32 is the support. So 32 is the exit unless it breaks 32. Then it's going to 30. GS. So GS is this is a move up, and this candle. So when this candle forms, Doji, you just it's just a warning sign that okay, I'm resting right now. I can go down, I can go up. So just watch me. Just telling you that I'm resting. Usually, so it depends where it's formed. So it's just resting. So if you are long, you can take some profit, or you just wait for it for the next move. So the next move came to the upside. So GS is breaking out. It's going higher. Halliburton, there's another one, crude stocks. So again, it gapped up. So if it breaks 47 level, it's going higher. So if crude is moving, the other stocks are, all crude stocks are moving. So this one is going up. Home Depot is on radar. So I'm just waiting for it to break this line. If it breaks, then it's a long. So Home Depot is long. If it breaks 180 and above, so it's long. So just watch 180, 181. It's long candidate. You see how it's trying to poke its nose from this resistance. When if it breaks, then it's going higher. JD, I sent JD trade to 2 of my services out of 8. So I saw this pattern on 7th of March. So this is a bullish candle, and I think one member sent me alert that Kamal, he sent me saying, look at JD. So I told him yes. So this is what it is. JD is bullish, it's going higher. So when you see this candle like this, bullish, covering all the previous candle, it's telling you, I want to go up, buy me. You don't have to wait. You don't have to think about it. And it's going higher. You see how it moved up? Now it's 50-day moving average is resistance. Once it crosses, it's going higher. So JD is bullish. JPM is bullish, crossing from 50-day moving average. So again, same pattern is bullish. So keep an eye on JPM. Kellogg, Kellogg, okay, so I showed you the chart of Kellogg. We traded long on a very bearish market because I saw the gap from 200-day moving average. So I said, why it's gapping up from 200-day moving average after forming this bearish pattern? So I went long, send the alert, and this is what Kellogg did. You see, moved out. There's no indicator. No, do you see any indicator? There's no indicator. It's not like I'm hiding from you using indicator and not showing you. It's not that. This is what it is. LRCX went crazy. So this is the V reversal. So from here all the way up, it's V shape. So LRCX is crazy stock. It went up like crazy. Just want to show you when the stock is going crazy, you can take advantage through vertical spread because you don't know how long the craziness will last. So in order to participate in that craziness, you can create a bias vertical spread and then participate and have a wider strike, so you maximize the gain. So when you see the crazy stock, you can put the vertical spread. And this is what this did. You see, broke out, it's breaking out. Macy looks bearish. You see, after forming this candle, it went on sideways. So went on sideways for 3 days. Then it gave up. So when it gave up, this is your signal to go short. So after forming a bullish candle, it went on sideways for 3 days. So you don't know what will happen, right? We don't know anything. It can easily go up, but we know on this day that it wants to go down. So as soon as you spot this move, you take action, you buy some puts. And this is what's happening here. You see, it's coming down. And especially when there is no support. And here's one window which needs to be closed. So window open, window closed. 2644 is the 2650 is the support. So you have 2 points potential. But the ideal entry was at this day on 8th of March. MCD is bottom, and there is a big window which is getting closed. So window open, window closed, MCD bottom is long. My Thai client, they trade McDonald's. They have certain requirement to trade. So I send them McDonald's and other stocks. So I send them to buy McDonald's, especially for Thai clients. So window open, window closed, windows getting closed, McDonald is bullish. You still have time. So this is the ideal candidate for vertical spread. When you see this kind of move, you can take advantage. It may take time to move, but it will move to the upside. The direction has established. MGM. So I did not trade MGM. So on the Win Resort day, MGM was also moving. We made big money on Win calls. We were before the news came. So if you know that the stocks are moving, you need to know what other stocks are moving in that category. So you need to have the list of the stocks in each category: crude stocks, gold stocks, retail stocks, construction stock, steel stock, casino stock. So you need to prepare the groups, and then you say, okay, if this stock is moving, what other are moving in? Is there other stock moving in the direction? Let me take a look at that one. Maybe I can catch that. So MGM was moving on 9th of March. You see, Monster is telling me that it wants to go up. I don't know what happened on 5th of March. I prepared. Yeah, then on 9th of March, see, this is where the dinosaurs came. So if you know, okay, dinosaurs may have come here, and then if they are proving that it's going up, there's a big window here. There's nobody need to tell you that you should be buying it. You should be telling yourself, okay, I'm going to buy Monster Beverage. But if you cannot decide, you can sign up for my service, and I will teach you more in my 6-month coaching program. So this window is getting close. It will get close. Microsoft facing resistance right here. So I'm showing you a lot of charts today. Microsoft is facing resistance. If it breaks, it's going higher. So I watch Microsoft, especially for my Thai clients, they trade. So if it breaks, I'm going to send them alert, okay, buy Microsoft. So Microsoft is a $100 stock. Long time ago, I mentioned $100 target when it was in 80s. So Microsoft is trading, going towards 100. Morgan Stanley, I'm long at MS just because of this formation. No, I sold it already. Sorry, I bought it and I sold it already. I already made money on my Morgan Stanley. So it's going higher. You see the pattern? This is what I saw from support rising. So I said, okay, let me buy some Morgan Stanley. I mean, if you're stacking the probability, what are you stacking at? What are you saying? Going down or going up? It's going up. So I bought some calls and I sold it. Now it's breaking the resistance. MU, okay, if you are my member, if you are attending webinar, you know I've been telling you MU has bottom. I showed you the charts right here. You see the dinosaur? This is where the dinosaurs are hiding, right? They cannot hide their footprints. So this is the dinosaurs. Only dinosaurs can move the market up from here all the way here. Me and you cannot move. And this is what's happening to MU. It broke out. So dinosaurs bought here. Me and you are buying here, suppose. So what chance we have when it drops here? We lose all the money, they still make money. So this is dinosaur sitting right here. You see how it's going up? Now gapped up. It doesn't mean that gapped up that it will come down. It's just keep going. Netflix. So I kept saying Netflix going higher. People send me emails saying alpha, seeking alpha, saying that the Netflix will go down because of Trump tax plan. I don't read those kind of articles. I don't know what will be the impact because of Trump tax plan on Netflix. So I see Netflix going up. It's just going up. So Netflix is going up. Nobody needs to tell me. I need to read that article on seeking alpha. So it's going up. It will go to 325 and higher. So Netflix is going higher. Pepsi is going higher. So when you see this kind of chart, you say, okay, I'm going to buy some Pepsi. It's going higher. Pepsi also, I spend some money. Also, although I reduce consuming Coke and Pepsi, I don't do any alcohol, Pepsi and Coke. So I sometimes buy stocks of Pepsi to take some money, my money back. So Pepsi is going higher. So keep an eye on Pepsi. Qualcomm. I showed you the chart last Sunday on 2nd of March that Qualcomm is set up as a short. And the reason I gave you, because it came down below 50-day, and then I said, okay, it may fail at 50 days. So if it fails at 50 days, it's a short, and there's a window here. And this is what happened. You see, I explained to you on 2nd, and this is what happened to Qualcomm. It broke down. So Qualcomm is short. It broke down. Starbucks is going up. So Starbucks is long. It's definitely crossed the 50-day moving average. Now it needs to move up. It's going higher towards this, closing the window. It will close the window. So we need to buy April calls on Starbucks, and the target is 60 right here. So when the stock gaps down, from where it gaps down, that is the resistance level. So anyone who bought at this, they are happy to sell at this price. So the sellers or the buyers who are sellers now, they are waiting for Starbucks to go to 60 so that they can sell and be very happy. So knowing that, you need to sell Starbucks at 60. Starbucks going up, you see. SLB, this is another stock. Crude stock is going up. You see the window form. So on the same day, when the many stocks gap up in the same category, you need to go long. TJX looks like it's coming down. So I don't know about it yet, but it can go down. So I have it on radar. Target. So we traded target puts. So I said, okay, it broke this support. And now it's sitting at 50-day moving average. If it breaks, I'm going to buy puts on it. So I bought puts and made money on target. TSRO, I sent it to end of day just based on these three consecutive candles. I said, okay, we need to buy TSRO. I sent it to end of day. They made money. It's going up. You see how bullish. Twitter, I showed you the chart on Sunday that Twitter is long. You should go higher. You should be long on Twitter. And this is what happened. Twitter went up. Twitter is long. So you should be keeping an eye on Twitter. UNP, again, this line at support. You need to keep an eye on UNP. Oh, I showed you the wrong. Okay, I think I showed you this chart on 2nd of March. If you remember, this was a chart simply at support line I drew that UNP fell at support, and this is what happened. Went up. UPS is sitting at support, so I'm watching the UPS. We sold, made money. I'm watching again to go long. And this chart was prepared on 1st of March. I showed you on Sunday, and this is what happened. UPS gapped up, kept going. We sold UPS, made money. VLO is another crude stock on 9th of March, was gapped up. So a lot of crude stock gapped up. So when a lot of stock in the same category gap up, that's the indication that they want to go up. WFC, it wants to go up. This is a highly bullish candle. So once it breaks, WFC is going higher. Wind Resort. So this is what I saw. 160 support. We traded many times. This is what I saw. Send the alert, poking its nose above the resistance, 50-day moving average. Then news came and it just went like crazy. You see, this is crazy move. Made a lot of money. X. So we trade X. We were long on X and we exited right here, or maybe later. We exited X, made money via calls. Then when I saw this resistance is not breaking the resistance line, so I said, okay, I need to get out of the calls and just watch, see what it does. So when it was doing this on Friday, we bought puts and made money, sold it same day. So it was a quick trade. So this is a quick trade pattern. So now the charts are done. I'm showing you the charts of markets and I will explain you the target and support. So this is the chart of Dow Jones. Last time I gave you the support and the resistance level of the 4 indices. This is the chart I prepared on 5th of March. So this is the Dow Jones on 5th of March. So simply by looking at this, you will say, okay, how do I read it? So let's see if we can show you. You see, on 7th of March, it pulled back, support line. It's just sitting at 24,500. So this is just a support. So you have to understand, okay, this is support. But the thing is, you have to know other markets indices. So if you're only looking at Dow Jones, then you are just blind. You have to look all indexes. Which one is giving you the leading, which one is acting as a leading indicator? So NASDAQ was the leading indicator. So I'll show you the NASDAQ chart. So Dow Jones is sitting there, move like this. This is a highly bullish candle. When the stock moves up like this, is super bullish. So market is breaking out. I'm not breaking out, but moving higher. This is the resistance right here a little bit. So this is a super bullish candle. If it breaks above, it's going higher. It broke 25,000. So your resistance is now here at this level. So super bullish. NASDAQ bullish. See, NASDAQ 50-day cross, 20-day moving average cross. Keep going up. Keep going up. Boom, broke the resistance. This was the resistance, it broke. Now it's in the territory where it has not gone before. So it could be 7,500 is possible. 7,500 for NASDAQ 100. My QQQ target 175, given long time ago. 175 for QQQ. SPX. So SPX resistance was given 2740 last time. So if you knew 2740 is the resistance, it broke 2740. So on 5th of March, it was sitting at 2720, 2726, then it moved up, then boom, this is a bullish, very bullish candle. So another super bullish signal given to the market. So don't listen to the bearish gurus. Russell. So this is Russell, same pattern, it's trapped. So I gave you the resistance, I think 15 something. I'll see the resistance level in the slide in a minute. So it's trapped in the resistance level, and this is what happened. Broke the resistance, super bullish. I mean, nobody has to tell you the market is in deep correction, I'm in the money market, all that is, you're listening to the wrong people. Don't listen to them. So it's going higher. So this is the resistance and support level last time. So this was the support I showed you, 67.89 for NASDAQ. And SPX resistance was 27.40, Dow Jones resistance 25.116, and Russell 2000 15.37. So these three were resistance, and this was support I gave. So the point I'm trying to make, if three markets are at resistance and one is at above support, you need to pay the attention. Which one will lead to what? Who is the leader? NASDAQ is the leader. And will it move the market? Other three markets, it did. Other three markets could have brought this down, but you have to use your previous judgment, previously what happened and all that is, you have to use your brain to figure it out. So NASDAQ was above, it was the leader and it's still a leader, and these were facing the resistance. Now what happened? All of them are trading above, and this is the support level. So I'll keep this slide open, and you can write down the support if you want to. Take a note, all the support. So the reason these support levels are important for you, because what happened? When the market comes down, if you know the support levels, you can take some action. Do something about it. Do not panic. Add some more. Look for more long opportunities if the markets come down to the support level. So just pay attention to the support level and you will make money. When any market comes down, buy the stock in that index and make money. So all these are trading above support, and these are the support levels. All right, so I think this is the last slide. Let me see. Again, I have a $17 offer. I've been talking to you since 4:30, and it's 6:30 now, 2 hours, and it's all free. So if you want, there's a link on the screen, $17 trial offer. You take it and see what it is. So if you have any question, let me see if someone has any question. From where we can get this technical chart? You can use any software or any trading platform. They have, Sanjay, they have all these charts. So you can go anywhere. How you analyze charts? Well, let me see. How do you analyze charts? I showed you how I analyze. Do you use any indicator? No, I don't use indicator. Do you have recording of past webinar which you can share? Yeah, I can share. I'll send you. Tacos are ready. Yeah, out of 10 trades, how many? 80% success rate. From where we can get this technical chart? You can get it on any platform. How you analyze charts for a single day? I analyze charts. I've been doing it for last 15 years, 14 years. So it's at the back of my hand. I just look at it and it takes me 30 seconds to look at it and I just decide. So let me see. Dinosaurs are Wall Street firm. Dinosaurs are those who have big money, not me and you. So they are dinosaurs. All right. So okay. So no more question. If I have anything else, if I miss, please send me email. Swing trial, you can take swing trial, $17 trial offer for $17, please. All right, so I need to go. I need to get ready for tomorrow. My throat is not good. Okay, thank you. And I will share the recording. You can watch again. Thank you very much for coming. Please come next Sunday. I will be here. Take care. Bye.